one of my favorites, and I think it's going to really bring in the specific context of maybe the downside to not converting. And we call this the 6 domino effects of not converting. If you never convert, that can set off what we call the 6 domino effects. But for each one, we'll also point out situations where staying with your IRA may not be so bad. So domino effect number one would be the higher adjusted gross income once your required minimum distributions begin. So the con there is that RMDs force taxable withdrawals that inflate your adjusted gross income and may push you into higher tax brackets. So, creating inefficiencies regarding tax planning because you're being forced. That's the key word, forced to be you're being forced and pushed into those higher tax brackets. Domino effect number two is that your Social Security also becomes taxable due to the aforementioned domino effect number one. So the con is up to 85% of benefits may be taxed once RMDs boost your adjusted gross income. The con here is that if a surviving spouse passes, or excuse me, if a spouse passes, the surviving spouse will have to move to a single filer status, meaning that the brackets shrink and the taxes go up. So again, if you have qualified funds and your spouse passes away, if you convert, the con here is that that spouse is being forced into smaller brackets and higher taxes, which could lead to higher tax bills. Domino effect number six is heirs will inherit the tax liability due to the recent Secure Act legislation, or what's called the 10-year rule. The con here is that heirs must drain those inherited IRAs within 10 years. And oftentimes that's going to occur during their peak earning years. The age that they're going to be making the most of their monies in their 40s and maybe 50s. So when they have to take on this liability of then draining down those taxable accounts, that could create a big tax bomb.